What's going on, guys? I hope everyone's having a great day. I am super excited to be bringing back another video. On today's breakdown, we're going to be breaking down one of the most exciting projects that's coming out in 2023 in D Hedge, a new multi-chain decentralized finance DeFi protocol offering innovative yield generation backed by tangible real-world assets. So I did an AMA on D Hedge, but this is my breakdown video. So in case you didn't miss that, that's going to be at the end of this video. But in the meantime, let's break down what is D Hedge. A major problem plaguing most DeFi and nodes as a service is excessive token emissions and sell pressure. Many DeFi investors have seen their favorite DAO or node projects slowly die due to increasing artificial sell pressure. D Hedge believes this is a three-pronged issue. 1. Project founders and developers take too much tax on buy, sells, and claim functions. Many projects promise APY percentage in the thousands and even hundreds of thousands. This is currently not sustainable and never will be. Treasuries and vaults are mismanaged by individuals lacking sound DeFi investment strategies. These conditions lead to investors quickly continuing selling off their positions because return rates quickly diminish and any gains made are eaten up by high taxes and fees. This leads to the inevitable loss of confidence in the protocol. Certain protocols provide false premises of being able to afford a Lambo in less than a year. This is extremely deceptive, and DeHedge.fund is here to correct errors of the past. DeHedge eliminates these issues in several ways. First, DeHedge.fund doesn't have a reflection reward token that is constantly sold on the market. Instead, DeHedge.fund pays rewards with stablecoins. This is a simple fix with profound results. Deposit stablecoins, receive stablecoins and rewards. Second, DeHedge.fund aims to provide a minimal return of 15 to 20%. This range of APY reflects a long-term growth mindset of years, not weeks or a few months. Initially, offering realistic APY allows DeHedge.fund to offer higher APYs as the protocol matures over time. Consistent, steady growth is what most modern holders are looking for. Finally, DeHedge.fund will receive frequent audits to ensure the treasury and investments are operating securely and efficiently. Audits will be a core part of D Hedge operation, and they got audited by Assure DeFi. What is D Hedge? D Hedge is a new multi-chain decentralized finance protocol offering innovative yield generation and lending aggregation strategies. We aim to provide investors with long-term predictable returns, stability, and peace of mind. DeHedge.fund's user's interface is intuitive for newer investors while providing powerful yield strategies sought after by all experience levels. D Hedge will be available on most EVM compatible networks including Avalanche, Binance Smart Chain, Phantom, Polygon, Ethereum, Arbitrum, and Pulse Chain. Red Light Chain is the first truly gasless blockchain, annual percentage yield over several different fixed-term options. D-Hedge aims to build a policy-controlled currency system on all EVM-compatible networks. What does this mean? First, there is no need to purchase a protocol-specific token. Investors simply deposit stablecoins to be determined by chain. Second, rewards are paid out in the same stablecoin. For example, an investor deposits USDC on AVAX chain. They will receive rewards in USDC. To begin receiving rewards, investors simply stake their USDC into D-Hedge for varying amounts of time by minting a bond. When that time is up, investors can withdraw their funds in rewards or reinvest it as they see fit. D-Hedge.fund believes in a long-term approach. D-Hedge.fund prefers stability and consistency over falsely inflated APY numbers. D-Hedge.fund offers stability in addition to eliminating artificial sell pressure seen by most DeFi projects and tokens. D-Hedge is built to optimize asset growth and wealth creation. So what are the key components of D-Hedge? So DeHedge.fund utilizes several key components to drive their protocol. These components are designed for flexibility and security to handle volatile markets and security threats while maintaining excellent yields. Bonds. At the center of DeHedge.funds are bonds. Investors can think of bonds as digital savings certificates for cryptocurrency assets. The function of a bond is to represent a deposit from a new investor and then pair the investment with one or more yield generation strategies at the time of minting. These yield generation strategies constantly seek out the highest APY with the best mechanics in play. Apart from the strategy employed, bonds share certain characteristics. The token an investor deposits into a bond is the same token the investor receives their yield in. Bonds might have one or more strategies in play at any given time, up to 20 strategies running at once. This is to increase flexibility in volatile markets. There's an upfront 5% allocation of the staked amount to Team Wallet for future development and expenses. Bonds employ the ERC 721 standard is the NFT standard. This means bonds can be traded in secondary markets or wallets. Initially, bonds will be focused on stablecoins such as USDT, DAI, USDT-R, and future vaults are planned to accept popular alternative coins across different L1 and L2 chains. Strategies. Our strategy is a financial mechanic acting upon a certain market to produce yield on investments. D-Hedge will be operating multiple strategies at any given time across multiple vaults, blockchains, and yield aggregators. Investors will have the option to select automatic vault strategies or to manually enter which strategies will be used in their vaults. D-Hedge allows anyone to create a strategy. To get a strategy approved by the DeHedge.fund team, it must pass a strict vetting process. If the strategy passes the vetting process, creators will receive excellent bonus. For a full list of creator bonuses, visit the DeHedge.fund website here. Vault monitoring. There are thousands of vaults operating in 70 DeFi protocols across 26 blockchains. Market conditions, strategies, and protocols themselves are continually changing. It becomes clear that maintaining vaults at peak efficiency could become a full-time job. That's where DeHedge.fund comes into play. The dedicated team of yield strategists will closely monitor and select the best new vaults for integration into DeHedge.fund's vault structure. This will be accomplished through a combination of subscription-based vault monitoring services, independent market research. Automated vault monitoring and adjusting combined with strategy matching flexibility gives DeHedge a competitive advantage over other utils. Insurance. DeHedge offers protection of investor funds through Secured Haven. This extra layer of protection gives investors additional peace of mind. Secured Haven provides reliable, robust, and secure DeFi insurance services. Secured Haven utilizes two interoperable arms like traditional insurance companies, the insurance arm and the investment arm. The insurance arm maintains reserve pools that maintain the solvency needed for their claim coverage. The investment arm maintains investment pools with different risk categories. So roadmap. Our first multi-chain solution involves fixed duration staking with an APY ranging from 15 to 20%. Phase 1 will be live in quarter 2. As our treasury grows, so will our offerings. In phase 1, DHedge will offer 4 staking terms: 1 month, 3 months, 6 months, and 12 months. DHedge will offer a box-based selection so users can easily select their desired term. Connect your wallet, deposit funds, choose your staking term, and start earning yield. It's that easy. This process generates an NFT bond. The bond will now be tradable as an ERC721 NFT. Bond owners can trade and transfer and sell on any supporting NFT marketplace. Dividends are accrued to the NFT holder daily. 50% of current accrued dividends can be claimed monthly. So we have the development team in our State of Wyoming DAO LLC. The team at DeHedge.fund are survivors of DeFi Node Rogue. The core team will be publicly identified by Assure DeFi. For added piece, all legal entities are included in the LLC. So that's basically the white paper, and we go into more details about what DeHedge is later in the video. But now let's jump into the NFTs. So we minted out already of the tier 2. So now the cheaper Gold Rush DGen NFTs are available. So I'm super excited to mint me a couple of these because not only are they kind of cheap, but they're offering a pretty good ROI. And I think that this team could outperform. So if you want to mint a DHedge Phase NFT, you can join the Discord or see if your wallet will connect on the application. I'm going to get the team to reopen phase 2 so it's a little bit easier for everybody. So I'm super excited on DHedge. I'm going to give my thoughts at the end of this video, so you got to stay tuned. So honestly, I'm really excited for this project. You could hear it in my voice. So without further ado, I'll let you jump in right to the Twitter space AMA.